Changing in accounting estimates and errors. Change in accounting policy requires a retrospective restatement. Change in estimate requires a prospective restatement, and errors require a retrospective restatement. Change in depreciation method is an estimate, and change requires prospective application. Change in inventory method from FIFO to weighted average is a change in policy. Previously, immaterial effects. A company is a billion-dollar company and tally of rupees 20,000, 30,000 rupees expense off. Now they have implemented ERP and the cost of the same is 2 crores. Can we say it is a change in policy? The answer is no. It is not a change in policy as previously it is a material effect and will be considered as a new policy. Corona impact is not a change in policy. Application of change in policy. Due to Ind AS, is there any transitional provisions? Yes, as per transitional provisions. No, retrospective, voluntary retrospective. In case retrospective, third balance sheet needs to be given. FIFO to weighted average is a change in policy. In case change in policy, the below needs to be given. Nature of change, the amount of adjustments to all financial statements. In case the same cannot be calculated, the reason why the same cannot be calculated, and mentioning that it is impracticable to do so in the current period and future periods. Errors includes mistakes and fraud. Mistake is an unintentional error and fraud is an intentional error. Material errors, retrospective restatement. Case studies. According to Ind AS 8, adjustment in carrying amount of asset or liability resulting from new information or new development is treated as a change in policy, application of new policy, change in estimate, correction of error. The answer is it is change in estimate. An entity can change the accounting policy if the change is required by Ind AS, the change is resulting from new information, the change is resulting from new development, all of the above. The change is required by Ind AS. Which of the following can be considered as a change in accounting policy? The application of accounting policy for the transactions and other events and conditions that differ in substance from previously occurring, the application of new accounting policy for the transaction or events or conditions that occurred previously or which are material, both of the above, none of the above. The answer is B. The application of new accounting policy for transactions or other events or conditions that occurred previously or which are material. Which of the following is a change in accounting estimate? Warranty obligations, useful life of a depreciable asset, expected pattern of consumption of future economic benefits embodied in depreciable assets, provision for doubtful debts, all of the above. The answer is all of the above. Change in method of depreciation shall be in accordance with the Ind AS 8 other change in policy, change in estimate, correction of error as per management decision. Change in estimate. The effect of change in accounting estimate shall be recognized prospectively by including in the P&L of the period of the change, prospectively in the P&L of future period, retrospective, both A and B. The answer is both A and B. Accounting of Ind AS 8 prior period errors shall be corrected prospectively, retrospectively. Entity has a choice between prospective and retrospective, prospective and disclosure required. Retrospectively. Answer is retrospectively. According to Ind AS 8, the accounting treatment of correction of errors is applicable to mistakes and errors and not frauds. A true, B false. It is false. So by this we come to an end of the chapter. Stay tuned and do like and subscribe the channel. Thank you so much.